Hello, I'm Adam from Palmer's Accounting. VAT, 3 letters that can cause a lot of confusion for new business owners. When do you need to register? Should you register early? And what does it actually mean for your cash flow? Let's clear it up. VAT stands for Value Added Tax. It's a tax you collect on behalf of HMRC, not your profit, not your income, just something you manage for them. So when you're VAT registered, you add VAT to your sales invoices, normally 20%, and when you reclaim VAT on your business purchases. So in practice, you're just the middleman. You must register for VAT if your business turnover goes over £90,000 in any rolling 12-month period. It's not about your financial year or the calendar year, but a rolling total. That means if your total sales over the last 12 months reach that figure, even if it's mid-year, you have to register within 30 days. Miss that deadline and HMRC can backdate your registration, which might mean you owe VAT on sales you've already made. Now you can also choose to register voluntarily, even if you're below the threshold. But why would you do that? It can make your business look more established. You can claim VAT on expenses and startup costs, but there is a trade-off. Your prices go up by 20% unless you mainly sell to other VAT-registered businesses who can reclaim it. VAT isn't always straightforward. Different industries have different rules, and where you sell, whether that's in the UK or to the EU or internationally, can affect how VAT applies. There are also several VAT schemes available. The standard scheme is the default, where you charge and reclaim VAT on every transaction. The flat rate scheme works differently. You charge VAT as normal, but pay HMRC a fixed percentage of your turnover instead of reclaiming VAT on each expense. Each scheme has its own criteria and benefits depending on your business type and size. Because VAT can get complicated quite quickly, it's always best to speak to an accountant before registering. They can walk you through the options, help you understand how the rules apply to your specific business, and make sure you register in the right way from the start. VAT can affect your cash flow because you're collecting more from customers than you keep. That means you need to plan ahead and set money aside for your VAT payments. It's easy to forget that VAT isn't your money, it's the government's, so treat it like a liability, not a bonus. To sum up, register when your turnover hits £90,000 in a rolling 12 months or earlier if it benefits your business. And always get advice when registering, especially around which VAT scheme is right for you. We've got a detailed blog on VAT registration, and if you'd like help reviewing your position, please get in touch with our team at Palmer's. We'll make sure you register at the right time and in the right way. If you're new to business and have a VAT question, drop them in the comment below and we'll look to cover them in a future video. And we'll see you next time.